What's up everyone, Patrick here, welcome back. Moving on to the next question. So this example, it's written in the lecture notes. You don't have to write it out. You could print the lecture notes. They're at the beginning of the section on the website. So what are we working with here? We're told that at the end of the month, a company had assets, liabilities, and owner's capital of $160,000, $45,000, and $80,000 respectively. At the beginning of the month, retained earnings were $25,000. During the month, the earnings were $22,000. And we have to figure out what were the dividends paid during the month. So as usual, as the previous examples, I'm going to draw out the flow diagram of this. So we're starting with a balance sheet at the beginning of, we're dealing with a month here. That's what the period is. So this is the balance sheet at the beginning of the month. And then the equity is made up of capital and retained earnings. And then during the month, what's going to happen is we're going to have a change in assets, we're going to have a change in liabilities, and we're going to have a change in equity. And then the change in equity, that's made up of the change in capital and the change in retained earnings. And then at the end of the month, we would have the balance sheet, assets equals liabilities plus equity, and then we're going to have an ending retained earnings, and then we're going to have an ending capital. And then the change in retained earnings is the net income minus the dividends, which net income is split up into revenue minus expenses, like that. Right, so we got the flow diagram written out. Let's fill in what we're given. So the company had assets, liabilities, and owner's capital of $160,000, $45,000, and $80,000 respectively at the end of the month. So notice that's all end of the month balance sheet accounts. So assets, $160,000, that's here. Liabilities, $45,000. And then we're told the owner's capital at the end of the month. So this portion over here was $80,000. So this here is $80,000. And then we're told at the beginning of the month, the retained earnings are $25,000. So at the beginning of the month on the balance sheet, retained earnings $25,000, which is here, this portion. And then we're told the earnings were $22,000 during the month. Now earnings, that's another name for net income, that final line on the income statement. So just be careful with these questions with the wording. It could be different. I have it net income here on the flow chart, but it could be earnings, could be profit. That's another one, or even loss. This could be a negative number as well, the net income. So earnings were $22,000. That's the net income that's over here. And what are they asking for? They're asking what were the dividends paid during the month. So they're asking for this amount over here, right? On this separate calculation of the change in retained earnings, which is this, they're asking for this amount, this dividend amount. That's what we got to figure out. So notice that if we can get the change in retained earnings here, in this equation, notice we can get the dividend amount, because if we have a number for the change in retained earnings, we already have the earnings or the net income, and then we would just be subtracting the dividends, the x, that's what we're solving for. So if we can get the change in retained earnings, which is this, we could take that, plug it in here, and then we could solve for that x value. So notice that our first goal is to get that change in retained earnings from this portion of the flow diagram. And notice that that is possible because notice we have the beginning retained earnings. We're looking for the change. So if we can get the ending retained earnings, notice we can figure out what that change is going to be. And notice we can get the ending retained earnings from all of this information on that ending month balance sheet, because we have the assets, we have the liabilities, so notice we can get the total equity. 160,000 minus 45,000 would give us 115,000. So that's the total equity at the end of the month. And then that total equity is made up of the owner's capital and the retained earnings. And since we have the owner's capital, well, the rest would be the retained earnings. So we could take that total 115,000 minus the 80,000, which would give us 35,000. Right? And a lot of times it's not obvious which way we're going to go. In questions, I kind of explained it, showing you the steps. But if you're unsure about the way to go, sometimes just start filling things in that you can get, right? We have the ending assets, ending liabilities, so we can get the ending equity, so we could fill that in. And then from there, you'll realize, oh, we got this, the total amount, and that's comprised of this plus this, so then we can get this. And then notice when we have this and we have that, then we can get this, and then this can go to here, and then you could just start kind of filling in the blanks. So sometimes when you're not sure of the steps, just fill in what you can, and a lot of times the steps will become more clear. So we got the beginning retained earnings, and then we got the ending retained earnings. Notice it went from 25,000 to 35,000. So what was the change in retained earnings? Well, it went up by 10,000. And that's actually what we wanted, because that positive 10,000 would now go here. And now notice we could solve for that x. So this negative x we could bring over, that would become positive x, and then the 10,000 we could bring over, and that would become negative. And so this would end up being 12,000 over here. So that's the final answer. The dividends that were paid during the month is $12,000. So one more time, there's actually only one way in this question to go about it. There's only one set of steps. I don't think you can go about it any other way. So you got to find the ending equity first, 115,000, and then from there we can find the ending retained earnings, which would be this minus the 80,000, which is the 35,000. Then we could find the change in retained earnings. Went from 25,000 to 35,000, so it went up by 10,000. And then that 10,000 would go here, and then we could solve for the dividend. Final answer is $12,000.